Welcome to TalkTickers. We're your shortcut for getting up to speed on key earnings calls. That's right. Today we're digging into UFP Industries, ticker UFPI, and their results for the first quarter of 2025.
Yeah, it was an interesting quarter. Definitely some challenges, but also some strategic stuff happening under the surface.
Absolutely. So let's start with the headline numbers. What did the quarter look like overall?
Okay, so top line sales came in at $1.6 billion. That's actually down 3% compared to Q1 last year.
Down 3%. And what drove that?
It was a bit of both volume and price, actually. Unit volume dipped 2%, and selling prices were down about 1%.
Got it. And earnings.
Earnings per share landed at the $1.30, and their adjusted EBITDA was $142 million for the quarter.
Okay, so sales down, earnings reported. What were the main things putting pressure on those numbers, especially the margins?
Well, they flagged a few things. Manufacturing variances, basically, production costs running a bit higher than planned. Then there was competitive pricing, which seems to be a theme across a few segments. Plus, higher input costs, materials and transportation wasn't cheap either.
Right.
And finally, they mentioned an unfavorable mix shift. So selling maybe more of the lower margin stuff this quarter.
That'll definitely squeeze things. But they still finished with cash on hand.
Yeah, despite all that, they ended the quarter with $95 million in cash. So still managing the balance sheet.
One thing that stood out to me, though, was this mention of sequential improvement. Business actually got better month by month through the quarter.
Yeah, that's a key point. Even though the year-over-year numbers are down, activity apparently picked up each month, and they said March trends carried into April.
Which is maybe a positive sign, even if visibility is still murky overall.
Exactly. It hints at maybe some stabilization, perhaps. But yeah, they stressed that overall visibility is still pretty limited.
And they're working on costs too, right? Trying to control what they can control.
Definitely. They reiterated they're on track for that $60 million in structural cost savings by 2026.
Okay.
And they basically said, look, if the market doesn't pick up, we're ready to tighten the belt even further.
So managing the current climate, but also playing the long game with strategy.
Absolutely. They kept highlighting their diversified model, focusing on higher growth markets, pushing more value-added products and, innovation.
Like that new product push. What were the numbers there?
New product sales hit $106 million. That's 6.7% of total sales now.
Getting closer to that 10% goal.
Right. And the big star there seems to be their Surestone technology.
Ah, yes, the decking and trim.
Yeah, decking sales using Surestone were up 24%. Pretty impressive. And they said it's now over half of their composite decking sales.
Wow. So that's clearly resonating. But the overall retail segment was still down.
It was down 3%. That was mainly dragged down by an 11% drop in the decorators business.
Why was that?
They mentioned a specific customer shift impacting that part of the business. The Surestone growth helped offset it, but couldn't cover it all.
Okay. And are they doing anything about margins in retail?
Yeah, they've put through price increases to counter higher costs. And they expect margins to get better later in the year, especially as some new, more efficient production capacity starts running.
Makes sense.
Yeah.
What about the packaging segment? Similar story there.
Sort of. Sales were down 3% organically, 2% total if you include a small acquisition.
And the pressures.
Same themes, really. Soft demand, tough price competition, higher material costs hitting margins. They specifically noted structural packaging saw the biggest volume decline.
Okay, and then construction. That was flat overall.
Flat sales, yeah. But it's a tale of two cities within the segment.
How so?
Volume was actually up 3%, driven by their factory-built housing business.
Okay, strong there.
But that was completely offset by a 3% decrease in price, mostly coming from the site-built side of things.
Ah, so site-built still facing those pricing headwinds.
Seems like it, yeah. Continued challenges there.
Looking forward then, what's the general vibe for the rest of 2025?
The message was pretty much, expect conditions similar to Q1 to continue.
So no major pickup anticipated just yet.
Not really. They also mentioned the uncertainty around potential tariffs on Canadian lumber, though they downplayed their direct exposure, saying it's less than 15% of their imports.
Okay. And those long-term growth targets? Still aiming high.
The targets themselves, like 7-10% unit growth, 12% EBITDA margins are still the goal, but they acknowledge the timeline to get there is pushed out a bit now.
Understandable. Yeah. And segment-wise for the rest of the year?
They're forecasting demand to be slightly down across the board, maybe gains in factory-built construction, balancing out dips elsewhere in construction, but overall slightly down. And yeah, competitive pricing isn't going away.
Got it. Let's talk capital allocation. Sounds like they're still investing.
Oh, yeah. Very much focused on growth, both organic and M&A. They've got plans for about $1 billion in growth capital over the next 5 years.
$1 billion, wow.
Yeah, and they were pretty clear they like acquisitions, especially if the price is right compared to building new from scratch. Said the M&A pipeline is very active.
Interesting. And what about returning cash to shareholders?
Still doing that too. They bumped the dividend by 6%.
Nice.
And they've been buying back stock quite aggressively. $70 million in Q1, then another $107 million just in April.
So they clearly think the stock's a good buy at these levels.
It certainly suggests that, yeah. They still have about $122 million left on the current buyback authorization too.
Okay. And specific big projects, you mentioned capacity earlier.
Right, particularly in the decorators business, they're making some big moves there.
Like what?
Expanding their Selma plant, significantly adding capacity in 2 phases. Plus, building a whole new plant in Buffalo that should be running early next year.
What's the goal with all that expansion?
They explicitly said they want to double their market share in decorators within 5 years.
Ambitious.
Very. And the extra capacity will also help them make new stuff, like that Surestone trim line they're launching later this year.
And they think that customer transition issue in decorators will resolve soon.
They expect the main impact to be done by the end of Q2 and actually anticipate year-over-year volume growth in decorators in the second half of the year.
Okay, so a potential turnaround story within that segment.
That seems to be the plan.
All right, so boiling it down for investors listening.
Yeah.
What are the key takeaways here?
Well, first, that sequential improvement is something to watch even with the year-over-year decline. Second, the heavy investment in Surestone and decorators shows a real strategic bet on higher margin growth.
Right, confidence there.
Third, don't ignore the ongoing pressures in packaging and site-built construction. The broader economy still matters. Fourth, the active M&A stance could be a growth driver. And fifth, the buybacks show confidence and a commitment to shareholder returns.
Good summary. Okay, let's shift gears slightly. Time for our This Is Not Financial Advice segment, just brainstorming some, let's call them outrageous but plausible trade ideas.
All right, let's speculate. Idea number 1, playing on that decorator Surestone strength. How about a pairs trade? You go long UFP Industries, banking on that Surestone momentum and capacity expansion really kicking in.
And short.
Short a competitor, maybe one more reliant on traditional decking, without a similar kind of innovative, fast-growing product line. The idea is UFP outperforms specifically because of this decorator Surestone differentiation.
Interesting angle, exploiting that specific strength. Okay, what's idea number 2? Even more outrageous.
Maybe. This one plays on their M&A focus and the fragmented markets they operate in.
Go on.
You'd need some serious digging, but maybe try to identify a smaller private company, maybe a regional packaging specialist or a niche construction supplier that fits UFP's M&A criteria perfectly.
And the trade is?
A speculative long position in that private company, if you could even get access. It's a long shot, pure speculation, banking on UFP eventually spotting them and buying them out at a premium.
Definitely speculative, highly dependent on finding the right target and UFP actually buying them.
Exactly. Outrageous, but maybe plausible if you have incredible insight into private markets. Which, most people don't.
Fair point. Okay, intriguing ideas nonetheless.
Yeah.
That wraps up our deep dive into UFP Industries Q1 call. We've covered the results, the strategy, the challenges, the opportunities.
And even some wild speculation.
Indeed. So what stands out to you listening? Any lingering questions? Remember, this is just our take to get you started. Do your own homework.
Absolutely. The market's always moving.
Here's a final thought to chew on. UFP is investing heavily in things like Surestone and decorators, which rely on specific inputs beyond just lumber. As they push for that higher margin growth, how vulnerable might they be if there are unexpected supply chain hiccups for those specific materials? And could that derail those ambitious market share goals?
Good question to keep in mind.
Keep digging, stay informed, and we'll catch you on the next TalkTickers.